A new year's begun and it's already provided us with some truly interesting trades. Here are the 6 swing trades I have taken already. I hope you've had a nice start to the new year and that you're well rested and recharged for an incredibly interesting trading annum ahead. I sure know I am, as 2 weeks of relaxation and book reading has prepped me for some proper hard work ahead, especially when it comes to this channel. As the year took off in 5th gear from the very get-go, I'd like to briefly go through the new swing trade additions to my portfolio that I made and my technical reasoning behind them. And for the sake of speed and accuracy, this episode is divided into 2 parts. We kick it off with AAC Clyde Space, ABELCO and BAIN. But before anything, nothing in this episode is financial advice. Make sure you do your own research prior to any investments. And if you like this episode, then please like, share and subscribe. For those of you who have missed it, I recently made a thorough analysis on AAC Clyde Space, and everything that was said in that episode still stands. Shortly after the episode, the price made a fake out from the diagonal resistance. I positioned myself at the breakout but quickly released it again as soon as the price closed back under the resistance. Now it's made another breakout, and this time at much stronger trading volumes. For when we look back at the previous attempt, it wasn't supported by any particular rousing volumes at all. Instead, the fake out rather made a lot of sense and was not at all unexpected. This time around, however, things look stronger and I decided to take the trade immediately rather than to await the extra layer of confirmation for the price to exceed the resistance box. I did this for 2 reasons. First of all, we had an outbreak from the diagonal resistance and at solid trading volumes at that. On top of that, the price is also trading above all the EMAs. Secondly, upon true breakouts, prices are likely to move fast. So in order to maintain a strong risk to reward, one in which I'll again release my position if it were to fall back below the diagonal resistance, I want to catch any possible move early before it risks ruining my risk to reward setup. So let's find out whether the second time's the charm. My position in AAC is made up by 5% of my portfolio value, and the same targets apply as previously mentioned. This stock I bought for 5 technical reasons. 1. It's trading at a horizontal support. 2. It's currently trading right at the EMA 50 on the weekly. 3. Its 3-month decline of minus 55% has been accompanied by steadily decreasing trading volumes. And this part is important as it shows that the sellers have calmed the fuck down a bit. 4. The stock is still in a bullish RSI channel as it has barely cheated death at the lower bearish blue line. You see how close it is here? Yet it never broke below. This RSI behavior occurs frequently. Pay some extra attention to it on your charts and you'll notice it often. And 5. The stock has given us a bullish Harami cross candlestick. Previously on this channel, we have not focused much on candlestick patterns at all, and there are reasons for that. Yet certain patterns in particular can provide us with valuable clues on their own, so from now on we will include them more and more as technical complements to our regular analysis. Now, the characteristics of a bullish Harami cross candle are the following. First of all, it requires a prevailing downtrend. And secondly, it is made up by a red candle which entirely engulfs a doji within. And a doji in turn basically looks like a plus sign. Now, the thing with candlestick patterns is that the following technical reactions tend to be stronger the closer to the pattern they occur. In this sense, the longer it takes for the price to react, the weaker the candlestick pattern effect automatically becomes, statistically speaking. We may compare it to a magnet that loses its pulling or pushing strength the further away from its counterpart it is. And for that reason, any absence of up moves in the upcoming 5 to 7 trading days or so will neutralize or significantly decrease the impact of this bullish pattern altogether. My entry price was at 1090 and my stop loss is set at any closing below the previous local bottom at 0.097. My first target is at 1290, at which I will sell 25%, and after that I will proceed with a 2-bar trailing stop. As this stock is generally quite illiquid and a bit moody, I settle with a baby position of 2.6% of my portfolio value. After a 4-month consolidation following a 1000% move up, this stock was again ready to take off. Since its December breakout, the price has risen by another 50% and is now consolidating once more. The stock looks incredibly strong on every time frame and it has just taken out a new all-time high after a jumbo cup and handle breakout that stretches all the way back to the IPO in late 2014. That's a 6-year cup and handle. Yes, 6 years, not 7. And imagine the technical powers that can build up over such vast periods of time. This breakout was too supported by strong trading volumes, which is always central when it comes to breakouts and their reliability. Having said that though, there are of course successful breakouts that occur at low trading volumes, but statistically speaking, they're much more prone to failing than those of convincing volumes. Similar to the bullish Harami cross in ABELCO, BAIN is, apart from its continuation pattern, supported by a Harami which is basically the same as a Harami cross, but with the only difference being that the engulfed candle is made up from a green normal candle and not a doji. As BAIN is trading in uncharted all-time high territory in combination with its prevalent technical strength, I do find it a bit difficult to set specific targets at the moment. The technical map has to clear up a bit first before any such prognosis is feasible. And regardless of what, this stock sure is a potential runner that can make it far on its own momentum alone. And this breakout should be what every technical speculant has been waiting for. Not counting the bottom spike, the cup and handle target alone is at around 1940. I will sell off 25% at that level to secure profits and increase my stop loss to break even. But given the overall strength in this stock, I will try to ride it as far as I can, as this little pot of honey may have much more sweetness in store. My initial stop loss is set at 1370, for do remember that you can always re-enter a position again. I entered my BAIN position at 1520 and its total value amounts to 9% of my portfolio. In part 2, we'll discuss fingerprint cards, real fiction and Spectrum 1. That was all for now, thank you and goodbye.